How much do you actually make from dividends and passive income every month now?
I don't want to be too specific, but it is a 5-digit sum.
What is your portfolio sum like?
You can imagine having a full condominium in the stock market.
Some of the younger investors I talk to, they don't even have a Singapore stock. They start first with either crypto or US stocks.
Right.
How many percent of your portfolio is Singapore stocks?
Maybe 95.
95% are local stocks.
I also track my expenses using an SAF notepad that we buy from the army's market because I have to keep creating an entry when I spend on something. I got so tired of it, I stopped spending money because it was so tiring to write.
That's such a good tip. If you want to stop spending money, do that. Your story is very interesting because you were truly financially independent and time independent. But then, I know you. A few years ago, you went to take your law degree. You're teaching law at a local school, and you're also training people, teaching students. What made you want to go back into active income again when you don't have to? You're already so good with passive income. Hi guys, it's Dawn, Budget Babe again. Today I wanted to introduce you guys to my friend Chris.
Hi everyone.
So I actually met Chris when I was a fairly young vlogger and just started on my personal finance journey. He reached out, and then I met him at a face-to-face event with a few other folks, and I was very inspired by his story, which is that he has achieved financial independence by living off his dividends, which is enough to pay for not just his own living expenses but also his family. And when we say family, we're talking about his wife, 2 kids, and his mom. So that's a family of 5, and he earns enough now to basically carry the load for everyone. So Chris, can you tell us how much do you actually make from dividends and passive income every month now?
I don't want to be too specific, but it is higher than the median income statistics for a Singapore household, I think in 2023.
So is that like a 5-digit?
Yes, it is a 5-digit sum.
Oh my God!
But I want to emphasize, right, please don't focus on the numbers, right? Focus on your own capabilities and what you can do within the immediate 1 or 2 years of your life.
It takes time to build, right? So very recently I checked my statement and I got more than 2K in just a month. And I was like, wow, if I grow this further, it'll be even more. So I'm sure like eventually, hopefully I'll be like you next time. I'll get to 5 digits soon.
Dawn, I assure you that you will do much better than the folks in my generation because you've got better data sources, you've got more information that's being shared through Telegram groups as well as blogs, all right? So this is a positive message for millennials as well as Gen Z. It's a lot easier for you guys to be able to attain financial independence. It would be ludicrous if the younger generations do worse than the older generations. It means that as a country, we are not growing, right? So my mindset has always been to follow what younger bloggers are talking about, the space of personal finance, and try to learn a little bit from them as we come along, right? And if I can't contribute to it, at least I can summarize it so that older people can understand how it works as well. And FIRE is really something that is started by a younger generation of influencers, all right? In my generation, we didn't have FIRE. Yeah, it's just that I'm lucky enough to pick up some aspects of FIRE before it was invented.
Yeah, I met you. I think I met you about 1.5 years after my How to Save 20K in a Year article went viral, and at that time there was no concept of FIRE at all.
Yeah,
it only kicked in a few years later.
right.
Yeah, so this was really something that's changed in the scene. Okay, another thing though is that whenever we talk about passive income, people always ask how much capital do you have to actually earn that, because they think it's a lot. Right. Could you share at your 5 digits passive income every month, what is your portfolio sum like?
Okay, once again, I don't want to be too specific, but you can imagine having a full condominium in the stock market, right? So I think that should be enough for some people to try to derive the size of my portfolio. And
the important thing is building, right? Because I don't have a full condominium worth of investments.
You will soon. You will soon. Yeah.
But what I do have is that I remember my early investments for dividends was less than 100K.
Right.
And that has yielded me a sizable 4 digits every year now.
Right.
I'm 10 years in, right? So it took time to build. I wasn't as diligent as you because I also do like other types of investing, including growth and undervalued. So not all just dividend. But I'm also hopeful that as I grow that pot, my dividend sum will continue to grow. So talk about your growth journey. Surely you didn't start with 5 digits a month, right? How did you build that to get to your 7-digit portfolio? And what was the journey like for you?
Okay, a little bit of context, right? So in the 20s, one of our biggest fears as an IT professional is our job getting outsourced or folks actually getting retrenched, right? So I had to first of all figure out a way to reduce my expenses really drastically. And when I mean drastic, I mean, we can turn austerity into a form of art. I went from 3 meat, 2 vegetables for my cai png to 2 meat, 1 vegetable, and then 2 vegetable, 1 meat. And then after that, I went into vegetarian bihun. It is that kind of discipline that is required for me to reduce the amount of money that I spend. I also track my expenses using an SAF notepad that we buy from the Army's market. And because I have to keep creating an entry when I spend on something, I got so tired of it, I stopped spending money because it was so tiring to write into a notepad, right?
That's such a good tip. You want to stop spending money, do that.
Yeah, I think there is an obsession with apps and technology, but you don't understand that actually the most primitive forms of budgeting are often the most effective, right? If you can combine the kind of austerity with overtime in the workplace, then that would expand the amount of money that you can put into the financial markets every month. There's nothing that I love more than putting my money into dividend stocks and then waiting for the dividends to arrive month after month. Now, obviously, the number is going to be very small in the beginning, but I realized that you don't actually need a lot. I think the formula that I always teach my students is for every $24,000 that you put into the financial markets at a 5% dividend yield, that's $100 extra every month, right? And $100 extra can mean Netflix subscription, Spotify premium subscription, and that can add value in your life immediately. There's a reason why I'm not really willing to share my numbers is because I don't think you need my numbers to really benefit from this, right?
That's what I always tell people. It's like, it's not the person's entire portfolio, because some stocks maybe when you bought during a crisis, now it's not a good pick.
Right.
And it's also not the numbers because everyone is on a different journey.
That's right.
Okay, so I have a very important question though. You're a dividend investor.
Right.
You have probably a lot of dividend counters.
Yeah,
How do you manage
40 to 50.
40 to 50 counters, guys? Okay,
Yeah.
I'm a mom. I struggle with managing everything in my life, and I don't touch my investments as often as some people do. Can I understand how do you manage 40 to 50?
Okay. Now, if you follow a lot of influencers, a lot of bloggers, right, the philosophy towards your investment portfolio is that of a bonsai plant, right? You got a bonsai plant. It's very beautiful, and you need to prune it and you need to trim it. It requires a lot of effort. Right, I don't look at my dividend stocks that way. I see it as a cactus plant. Cactus plant requires a minimum amount of maintenance. All you have to do is to park your money into a dividend stock and allow the dividend stock to pay you over time. Now that means you don't need to set a very high standard as to what happens to your stock. Although in some cases where there is fraud, there is illegality, malfeasance, then you might have to liquidate some of your stocks and replace it with another dividend stock, right? So the trick is to be diversified. If you have one dividend stock and it gets into trouble, you're in big trouble. But if you have 50 dividend stocks and you get into trouble for one, it's really no big deal, right? Because it'll be offset by the dividends from the other counters.
Do you track all 40 to 50 for the news, or how do you do it?
Okay, so the tool that I use to track it is Stocks Cafe, that I put everything into one page, right? But I also have to read periodicals. I have to read the Business Times, The Edge, as well as The Economist to keep myself notified of any changes in the financial space.
But how do you track for the 40 to 50, right? So there are tools nowadays where you can actually set alerts, company news alerts on all these. Do you actually set that and read for all 40 to 50?
I don't. Like I said, it is a cactus plant. Sometimes I might arrive to see the cactus die on me. It's a little bit too late. Yeah, but I have a lot of cactus plants. Generally speaking, the ones that do well will offset the ones that do not do so well. And if you target a reasonable yield between 5 to 6%, you should do quite all right.
So I got another question then. During the GFC, one of your most monumental actions was actually in investing even when everyone was running for the hills, being very disciplined about it, being very committed. What were people saying about you back then? And how did you block out that noise?
Okay, it's really simple, right? The first thing you need to understand about the GFC is that I'm already financially dependent. I've been farming my entire salary back into the stock markets 3 years before the GFC hit. Okay, I worked in the stock exchange before that, so I was sort of in the middle of the epicenter when the earthquake hit. So I was very, very calm when it happened. Okay, and then I transferred to another commodities exchange. I was drawing a 5-figure income at that time. I was able to farm everything back into the stock market because I was already living on my dividends. The beauty about dividends is that the money is real. I mean, your colleagues can make fun of you, I did lose an entire BMW to the stock market, but the money that I get from my dividend is real. It's coming into my bank account, and it will come into my bank account even if I'm in a coma in a hospital. That's the power of dividends investing. So I think that effectively helps me block out the noise, right? But the beauty of it is that eventually the markets will recover within 2 years of a crash. And when that happened, I'm the only person invested. The BMW that I've lost came back as a Maserati. Yeah, and of course I've got friends who are flabbergasted because they were not invested in the stock market. But at the end of the day, if you have a good job and you have a decent portfolio that pays you enough to live for yourself, it's very difficult for people to offer an alternative to your lifestyle. It's very hard to dislodge because the amount of financial security you have is many times that of your peers. Yeah,
But did you not question yourself at that time? So you were still fairly young at that point. Did you not think like, oh, maybe this older person knows better than me? Maybe he's right and I'm wrong, so I should change my strategy. Did those thoughts not come into your head?
I'm a rebel, and so my MBTI is ENTJ. We are not nice, pleasant people. We are often very, very disagreeable. One of the last things that I would be able to accept is that an older person who is actually working in the workforce would know more than me, because my aim is not to be working for someone else when I reach his age, right? So that made it a lot easier for me to sort of navigate my way through the working world. And the second thing is, I've been through the education system. I know that the education system, at least for my generation, we're being trained to become some sort of like a factory worker, a cog in a machine. And I know that whatever I try to do has to be unconventional. It has to be different from what is taught by the education system. And it came very naturally to me because of my personality type. I'm a rebel, and I like to question things.
Let's talk about mainstream then, since you raised it. Now what is mainstream on social media and for the younger generation? It's in investing in these meme stocks, hype stocks, AI being the next big thing, and a lot of people are, like some of the younger investors I talk to, they don't even have a Singapore stock. Okay. They start first with either crypto or US stocks. Right. What is your view? Because yours is, how many percent of your portfolio is Singapore stocks?
Maybe 95.
95% are local stocks. Right. SGX should hire you as their spokesperson.
I think they should.
Okay, SGX, you hear that.
In that message about Singapore stocks, now I think that there are 3 valid reasons why we should consider the Singapore stock market.
And what are they?
The first is that there is no dividends taxation and there's no capital gains taxation.
Wait. So let me translate this, guys. So what this means is that for your 5-figure passive income, unlike me, where I have to pay freaking income tax to IRAS, you pay nothing.
I pay nothing. It is tax-free, okay?
Okay, IRAS, don't tax it. Don't tax this. Don't tax us, though.
There's nothing brilliant about this, all right? There's nothing brilliant about this. So that's the first reason why you want to look at Singapore stocks. The second reason is probate matters. Because Singapore doesn't have estate taxes, if anything were to happen to you and you pass away, when your beneficiaries begin to extract the stocks from CDP, you wouldn't run into such major issues, right?
Yes.
You need to think about that as well.
Exactly. Guys, I have a video on this, so I'm going to link it here below. Please go check that out about the risk of investing overseas and understand what you're getting yourself into. Right. Okay, so that's 2. But what's the third?
The third reason is that the current Singapore stock market is trading at a PE well below 12, right? And the cyclically adjusted price to earnings ratio is about 13.5, right? What it basically means is that the long-term expected return, if you invest in the Singapore stock market, is well over 7% real gains. Real gains means if inflation is 4%, you can make 11%, right? Yeah, and I come from an environment where we think about first principles when we invest. And so right now, the Singapore stock market is maybe 3 times cheaper than the US right now. So I do come from a place where there are logical reasons to invest in Singapore. It's just that, well, I think from the perspective of a young financial person, it's not particularly smart, right? And there are things to look forward to. There is a lot of pressure now for the government to do something about valuations in the Singapore stock market, because the Japanese have managed to improve their valuations over time, right? And so moving forward, we should be able to see some positive measures on the valuation of our local stocks.
How do you resist that though? So you see, like, in this era, especially on social media, right? Everyone is saying that, oh, you need to invest in US stocks. US stocks, you can get like multiple time, multi-baggers, capital gains. Everyone's talking about Microsoft, Nvidia, the big tech, even the smaller but groundbreaking tech companies, and talking about how the US stock market is just so big and liquid that you can get way more capital gains. How do you block out all that noise and pressure?
The truth of growth investors is you might be successful when you get really high returns, but the drawdowns and the standard deviation or the risk that you take is also abnormally high. And when that happens, right, a lot of rookie investors face a drawdown for the first time in their life. They're not prepared to hold on to it, and so they quit. And for the folks who are following the investment space, there are a lot of these influencers who support a particular stock like Tesla and all that. These people have totally disappeared, right? I don't have to be specific as to who these people are. They've disappeared from the scene, right? But a boring dividends investor like me, my blog is running since like 2007, and we have that kind of longevity because the investment strategies that we have, our standard deviation is about 12 to 15. We take a risk that is 20% lower than many retail investors, right? So we are in this for the long haul. And I really don't have a problem looking stupid for like even a decade of my life. You don't need to have a very high IQ to make it in the investment world. I think you just need to be able to understand what dividends are, which dividend, how do you ensure that your dividends are sustainable. And of course, you diversify so that you do not make any mistakes when it comes to a single dividend stock. And then after that, go on and live your life, right? Women have been complaining that when they find a date on Tinder, all they do on the first date is to brag about their crypto investments.
Wait, now we don't use Tinder already.
Yeah, probably some coffee meets bagels or some alternative kind of app. And when you see crypto crash, right, at the time, a lot of these guys, they disappear from the woodwork.
So Chris, talking about your dividends, right, and your age, one thing also is that as we get older, wiser, and with more practice, we become better investors, more skilled over time. Can you give a blended average into what that would be? Is that more like a 8%, 15%, 20%?
So we need to be very realistic about dividends investments. Our investments are not doing well. All right, I want to emphasize that, and I don't want anybody to have any rose-tinted glasses.
Because of the cut of the interest rates, the hike in interest rates.
Yeah, so as interest rates are going up, right, a dividend portfolio that's held for multi-decades, if you're lucky, maybe your internal rate of return 2 to 3%. So it's really nothing to shout about. But the beauty of these portfolios is that they generate about 7% of the cash flow of the current value. And so there's really no reason to sort of get rid of them. And the second thing is that when we talk about our net worth as Singaporeans, there are often, I think, three major components.
Property and CPF?
Yeah. So for me, I have an executive condominium that has doubled in value over the past 10 years. And I have been farming my dividends into my CPF through voluntary contributions over the years as well. Right? So if you are able to spread your eggs across multiple baskets, very hard to lose. Right? And I expect that if there is going to be a correction in real estate, my dividend stocks may recover. And even if that doesn't work, my CPF would always give me 4% for my special account. Right? So I'm going to make it very clear, okay? It's no magic pill.
I'll talk about skills though, because today it's not that difficult to find fixed income or even dividend investing options that can give you anywhere between 3, 4, 5 or some even 6% and are decently good. But over time, what we want to see also is the yield on cost increase, because that's what happened for me, right? My yield on cost initially, I remember there was this particular stock that I bought. At that time when I bought it, it was just 3%. Now today, because of the yield on cost and the increase, I spotted a really good investment. It grew over time. That yield on cost is like 15%. If you had to pin down a number, what's that blended yield on cost like?
Okay, I use Stocks Cafe to track my investments. It doesn't track a yield on cost figure. I don't think it is particularly high, nevertheless, but I can tell you that my current yield is about 6.5 to 7%.
But with all the earlier on investments that you make, would you say that is maybe closer to 10%?
No, nowhere near 10%.
But you started very early on.
Yeah,
Those costs would have been very low cost, right?
Yeah, but The thing is that I would be able to share it if I have the numbers, but I'm sorry, I don't think it is really that fantastic. And I don't think you need to reach that level. So a current yield of 6.5 is not too bad.
Okay, so that's a good tip. You don't have to be an like super high yield on cost either to get to the level that people want to get to. Your story is very interesting because you fired, you took a break, and then you had all the time to spend with your kids because your dividends was paying you and you didn't have to work. You could do what you wanted with that free time. So you were truly financially independent and time independent. But then I know you. A few years ago, you went to take your law degree, and then now you're teaching you're teaching law at a local school, and you're also training people, teaching students. What made you want to go back into active income again when you don't have to? You're already so good with passive income.
I think that's a very, very good question, and it's something that I'm currently grappling with. The truth about FIRE is that FIRE is very abrupt. Either you work or you don't work, right? When you get yourself to leave the rat race, you suddenly find yourself with no work identity, with nothing to do, but you've got income coming in. So that was what I was facing in the year 2014. And I find that that might not be the right kind of lifestyle for a lot of people because a lot of our identities are invested into our work. I was fortunate because I'm quite academically inclined and I could get myself into almost any school that I want. So I went back to law school. And even after that, I felt that a legal career wasn't right for me because I was doing divorces and criminal law. And the work is emotionally very burdensome. And then I decided that, what the heck, Dr. Welf offered me to be a freelance trainer. And I thought, that career wouldn't last very long, but maybe I can have some fun when I'm teaching people investing. I didn't expect to graduate 34 batches of students and 700 people. And I think that, I do enjoy teaching a little bit. So now I teach investment courses, and I've started to add 6 hours to Temasek Polytechnic, where I teach corporate law as well as legal technology, right? Now I'm relatively free. If I take 1 hour of my time and I invest it into my work, would it improve my life satisfaction or not? We need to ask questions like this, right? And we do it hour by hour. There will come to a point of time where if I add another hour into my work, it doesn't bring me additional life satisfaction. You need that kind of granularity when you're doing lifestyle design. That's very difficult for people in my generation to apply because my generation, we're taught that we have to sell our time in blocks. We have to sell what they call the 9 to 5 period from Monday to Friday in order to get a salary. Gen Z doesn't have that kind of restriction anymore. Right? Ultimately, they can sell their time in hourly blocks and they can decide what kind of life makes them very happy. And I think that is the latest tag on my realization. And if you follow the latest influencers and you read their blogs, right? Essentially, Gen Z wants salary as a service. You want to switch it on, earn a little bit of money, then you switch it off and then you go for a holiday and you take a break. I'm still going through the lifestyle design and I'm very happy to say that I still want to sell my time for more work again. Right? Because I feel valued by society and I make more friends.
That's a good point. Okay, one last question before we wrap up. For someone who is a working professional, very dedicated to growing their career, and yet they also want to invest the accumulating cash savings that they're having, if you were in that position, what would you do? Option A, invest in dividend stocks like you do. Okay, with all the tools available now, it's easier to pick and do the research now more than ever, but that takes time. Or option 2, go for a straightforward dividend ETF.
Okay. I'm really against the idea of a dividend ETF at the moment, but I think to be fair, we need to look at the issue of expenses. Because these dividend ETFs have hidden expenses, if it is anything above 0.3%, I would advise you to think twice because there are global equity ETFs that are cheaper than that. In fact, the Dow Jones Diamonds ETF, the number is close to zero. You can actually invest for free. And the truth is that these dividend-based ETFs, the yield isn't particularly high because of these management fees. Say, for example, you have a relationship manager from a very big bank, and the person offers you a dividends ETF or unit trust, right? You might be better off just saying that I'm not going to listen to you. I buy the banking stock directly. If you buy the banking stock directly right now, you can earn about 5 to 6% every year. Whenever someone were to give you any financial advice, it normally comes with a fee. And you need to be really savvy about these fees. I am extremely leery about paying fees to any professional. And it's maybe easily a 1 to 2% uplift to my performance every year. So I can save a ridiculous amount of money, even if my portfolio is mediocre. We are going through a bad patch at the moment, but I've saved a lot of money not paying these fees over the years. And sometimes that is enough.
I think that's a great shout out, because nowadays we're seeing lots of fund managers start to offer this. It's easy for someone, just invest, pay a certain amount of fee and then get a certain rate. But what you said is also a great reminder that if you're paying fees, you should then question what is your alternative. If you can do it yourself and get a comparable yield, then you shouldn't be paying this fee. The only reason why you would do it is if you cannot do it yourself, or your results suck, your skill sucks, then okay, fine. Then you're happy to pay the professional this fee to manage for you. But otherwise, it's not that difficult. I don't think it's difficult to learn dividend investing, and then you can actually just pick up those skills and go and invest yourself and save all the fees. And in fact, I would argue, all these fees that people pay professionals, if you just take a fraction of these fees to go and learn about dividend investing, whether it's in terms of free content and free resources on books online, or even paid courses like the one that you offer, or everyone else, there's so many options in the market right now, right? You would actually be saving even more in the long run, right?
I know that I conduct an investment course, but for the people listening in, if you just invest in a few books by going to the library, it might even make you a better student when you actually sign up for an investment course, because this way you could challenge your instructor with more intelligent questions and you're also easier to teach. Everybody can learn a lot from each other. Yeah, sometimes the best investment ideas actually came from my students.
Yeah, so that's us for today. Thank you, Chris, for doing this interview and for sharing with us your inspirational life story. See you in the next episode. Bye!